want to make one point on IRCTC as well.
Yeah.
That stock is up almost 3.5%. In fact, let's take this question to Dhiraj Agarwal, Managing Director at Ambit Investment, who's joining in now. Dhiraj, you know, this entire space, right? I mean, not just PSUs, we're also talking about how there's now religious tourism, which has become a big thing, and, you know, names like IRCTC benefiting from both those themes, right? What do you do here? If someone has missed this rally entirely, does it make sense to take fresh positions here?
Well, if we're talking about the PSU as a basket and not just IRCTC in particular, I think PSUs as a basket were almost trading at bankruptcy valuations in 2020. I was actually tracking the price to book ratio for the BSE PSU index. And 2019-20, the price to book was 0.6 to 0.7 times for the entire PSU basket. A number of companies were offering dividend yields of double digits, 10 to 12%. And at that point of time, the usual investor refrain used to be that many of these companies, the terminal growth or terminal value is zero. So the price to book or price to earnings, the dividend yields don't matter. That narrative has totally changed now. And I think that there are more legs to the entire PSU rally. So from 0.7 times price to book, the BSE PSU index is now 1.6 times. The previous peak that we have seen in 2007 to 10 cycle was almost 2.7, 2.8 times, almost close to 3 times price to book. I don't know if it goes there, but I mean, who knows? The second thing is that every bull market, if you notice, there is one or two asset classes which actually keep running till the time it enters some sort of a bubble or a hugely overvalued zone. So the previous bull market was driven by quality. The current one is driven by PSUs, a bit of capex and mid caps. So I think there is more to come.
Okay, Dhiraj, hi, good morning and good to see you. Well, this market doesn't oblige consensus, right? And the consensus feeling at the start of this year was banks will do well. And if banks have to do well, what about the largest bank in there? Shocker coming in last week, right, from HDFC Bank. Now, the point is that maybe lack of positive triggers, but is downside limited from here? And would you look to get in at these levels, given the valuations, given the pedigree, given the quality of the bank?
Even I was on the camp that banks should do well this year, given 1 year of underperformance. In fact, last month on your show, I said
yes,
banks should come back this year. But I'm questioning that view at this point of time, and in fact, almost doubting it, because the few results which have come out very clearly show that there is tightness in liquidity, which is showing up in banks facing difficulty in growing the deposit book. So we have known this for a while, that the credit growth has been stronger than deposit growth. The deposit growth needs to pick up in order to either maintain the credit growth or the margins will have to take a hit. This is now finally playing out. So I think there will be some more adjustment time for this process, either through some more margin contraction or even credit growth slowing down a little bit. So best case, I think banks bouncing back is now pushed to second half, if not next year.
Got it. Dhiraj, hi, good morning. Good to have you here. Just a quick word on IT services, where, if you look at growth expectations, right, except maybe a Persistent or a Tata Elxsi, if you look at pre-COVID growth, 3-year growth pre-COVID, all the way till 2019, and look at growth estimates for 2024 to 2026 or so, except these 2 or 3 names, and throw in a Cyient there as well, growth rates forecasted are actually, meaningfully lower as compared to the pre-COVID growth rates. What's your sense on this pack?
So in the last 1 month, especially, IT has benefited because banks have come down. So remember, we are seeing a very clear pressure on consumers, especially FMCG. So we saw HUL results yesterday with the volume growth of just 2%, and we've been listening to the commentary for the last 3 or 4 quarters now that rural will revive at some point of time. But at this point of time, there's a lot of skepticism and disbelief out there. So keep FMCG out. So that leaves only 2 large sectors, IT and banks. And this has actually been happening in the market for 4 or 5 years now. If one sector is under pressure, the second one automatically sees some inflow. So, but you're right, growth is under pressure for IT. I think the big sort of the judgment day for IT is going to be the December quarter results, when there will be a much better sense on what the budgets for next year look like. There is still a divided house at this point of time on the street. Some people think that the growth will rebound in FY25. Some people think it will not, or not by meaningful margin. I would tend to be slightly in the second camp because if everybody is expecting the US economy to slow down and the rate cuts to happen, it's difficult to envisage that IT growth will pick up in a very strong way.
Okay, well, for the market, I mean, the mid-cap end of trade is really surging right now, 350 points higher. And look at the way stocks are moving. RVNL is up 10%, IRFC is up 9%, IRDA is up 9%. The entire PSU basket is looking pretty good. Particularly, Dhiraj, I mean, just coming back to, we spoke about the PSU basket overall, but coming back to some of these themes, there's the renewable energy space, right? IRDA has had a fabulous run since listing. There's the railway space particularly. Do you think that it's too late to get in here, or do you think there's more scope now?
A few of the specific names, one has to look at the numbers and the valuations and be a little careful whether we're already discounting 6-7 years of good performance this year itself. Overall PSU theme, I've clearly said that I think there are more legs to it, but with each individual name, when a theme plays in the market, I'm happy to consider that the stocks will go into a little bit of a bubble zone. So I really like George Soros's quote when he said that when I see a bubble forming, I rush in to buy, add some fuel to the fire. So that might happen. We've seen bubbles forming in other parts of the market in different cycles, different bull cycles. This will also eventually form here because this has become the darling of the market. But I'm not commenting on each individual name whether they're buys or sells here. One will have to take into cognizance valuations with respect to earnings growth.
Okay, all right. Dhiraj, well, good speaking to you, Dhiraj, today. Thanks so much for joining in on a Saturday morning, giving us your view on various sectors. Wishing you a good Saturday ahead. And let's hope this trading session continues to be as strong because we have a fair bit of green on the screen.